Good morning, good morning. What's up, everybody? I think this thing's working. Let me know if you guys can hear me. Oh man, it's Friday. It's Friday, it's Friday. Sound okay? You guys can hear? Cool, cool, cool. Good. Well, it's been a good week. We're learning a lot this weekend. We're figuring out some stuff, which is going to really help our traders excel in, especially this coming summer and into the rest of the year. We're coming up into those summer months, and as you can see, the ranges are starting to get bigger again. We've got we had a really tight short squeeze yesterday, kind of unexpected. Yesterday I was looking for, and I left the previous profile in for the overnight. Just I wanted to show you guys the where is it here? There's Wednesday night's profile. There's Thursday night. Okay. We had a lot of accumulation. We did a look above and fail of 76.31. The target was the middle of the zone at 75.11. And for those of you who were short the overnight, that was a nice trade. Like I said, 20 contracts short in the 16s with a stop up here is, that's an $80,000 trade. Not a bad way to end the week. But what happens if you're short and it doesn't take out the target? Now let's see if you guys have had your coffee. What if a market, you're short, you've got great trade location, everything's just cooking with gas, right? It's beautiful. What do you do if you're short, say you're short 7,600, right? In the Wednesday overnight. It gets down to that 75.41 level and it goes down to 75.26. You cover some at 36. You're short 20 and so what do? You got 10 left. Anyone? Bueller? Hello. It's not a rhetorical question, guys. Did I lose voice? Is this thing on? Okay, someone's typing. Good, Travis. Thank you. Right? He flattened, right? You know, because if you stayed short yesterday, hoping for 75.11, as soon as it took out the overnight high, it was telling you, I mean, even if you were really, really stubborn, you know how people are really stubborn, right? Cover your position, right? If you're short up here and it goes down here and you cover half and it breaks the overnight high, just buy it back and take that profit. So it's not 80 grand, maybe it's 40 grand or 50 grand, but at least it's $40,000 that you didn't have at the beginning of the week. Does that make sense? Okay. Now, you use the levels I provide with you guys to get out of trades so you don't give back the money you've made. It's one thing to have a great trade, but then it's another thing to give back all those profits, right? That just doesn't make any sense from a business perspective. Okay? So that's what I want you guys to, everybody wants to hold trades longer and, make all this money and everything, but do you have the common sense to do it combined with the skill, right? Every time I preach, I'm trying to pull you guys back to reality, right? Always back to reality, okay? So that's one thing. Then we had a big move up, and then last night I said, what did I say last night? At the close in the room, I said, look for the backfill. And that's exactly what happened. The other thing I said is that 75, 76 level, right? We closed over it, but as soon as we broke it, look, all that trapped long inventory, boom, started to fall out again. Now we got a B profile. Right? We have a profile that's shaped like the letter B. London's going to open now. Let's see if it holds yesterday's low. If it holds yesterday's low, they're going to take this and they're going to rail it up like this. Okay? If it breaks yesterday's low, it's going to come to 75.36. You guys feel me? You understand what I'm talking about? The overnight price action is not weird, Aaron. It is exactly as it should be. The overnight price action is doing exactly as nature intended. Now I want to show you something. Okay? We trade these balance zones. And they're great for when the market is back and forth. But what happens when the market trends? Then we need a different tool, right? So what I've come up with a couple of the folks, well, one person in particular in my room, is when we're going to use these EMAs, and I still don't know whether the 9 is better than the 20, right? I still can't get a straight answer out of you guys. But what it is that you use balance to trade this, and you use balance to trade this. Okay? So what you're going to do is you're going to use the balance zones to trade the accumulation and the distribution cycles of a market. When the market breaks, then you can use the EMAs, right? And that's how you can hold trades longer. And then you can also use your balance loans to give you targets. But you can use your EMAs to tell you when to get into the trade. Like when it breaks, comes back, tags the balance, and then pushes. For you breakout traders, use that EMA strategy that Steve teaches, right? To get into the trade and stay in the trade until it breaks the 9 EMA. Okay? So we have two tools now. We have a tool for choppy balance or cost basis trades, and then you have a tool for trend. Okay? because you need to have different tools for different types of markets, right? So, Aaron, you can say that the price action is weird, but if you look at yesterday's cost basis from the overnight, check it out. We took this, we went and sold it, put it on sale, but we're still back at the top of this cost basis. You get that? Does that make sense? Everything you will ever know about this business is about inventory and cost basis. So this blue area is how much we paid for the crap, right? So they say this is a chart of pineapple sales. This is where we went to the Dole place, right, on Oahu, and we bought our pineapples here. Then we take it to, what do you guys say, Cisco in Hawaii? Star Market, and we put them on sale, right? And this is the top of the pineapple selling chart. That's where all the hollies from the mainland come in and they're buying $25 pineapples. But after a while, the pineapples start to go bad and we need to mark down the price, right? So we start putting it on sale. We find some buyers, try and raise the price. Nah, competition, so we sell it down. So this 90 MA strategy on the way up and way down is going to help you. And cost basis is going to help you when we're going, right? When we're going sideways, right? Does Star Market still exist? Or is that an old thing now? They better still have longs, right? Longs better still exist. So yeah, we're in sort of a backwards, a back and forth. Sorry, not backwards. It's Friday, right? Yeah, it's downtrends always get you, Aaron, because what happens is you try and buy that dip and it keeps dipping and it keeps dipping. What I've learned, right? What I've learned in my 34 years in this business is when a seller shows up, and the other sellers start competing, and you watch that offer moving lower and lower and lower, just get out of the way. If you're not short, I know people are like, oh man, I should have shorted. I know everybody wants to short it. Everybody wants to be a hero. But the thing is, sometimes you're going to miss those trades. And that's okay. You'll get them later, right? You might not get them this year. You might not get them this month. But eventually, you'll start becoming a better short seller. Don't worry. It just takes time. But when it starts this downtrend, and you can see the prices being marked down, right? And that's why you should really check out our room and ask us. Because yesterday I said they marked up price, they're going to mark it down overnight, allow the shorts to cover, right? We still have, where is it here? That new contract is trading 76.17. Still not much volume in it, right? Still not much volume in the new contract. Only 1,800 contracts. That'll start heating up next week, right? So it just shows you not many people have rolled the thing yet, right? So they're trying to do some covering. So this back and forth washing machine that we have right now, right? We're doing this. You want to trade those rotations, right? So as we get down here, let's see if that overnight. Oh gosh, London's going to open. Hang on, let me get here. London is opening. Now let's see if London can get down and take out that K low. Okay? Let's see if we can take out the K low. Because the overnight point of control is here. It's around 1,700 contracts. I'd love to see that overnight point of control move down here to like 55, 54, right? And what I'm doing is I bought a little tiny position here from the 53. Where's my cost basis? It's around 54. And if I break 51, I'll get out of the trade, right? Let London come in, do what it does. It's opening. We're trying to get some cheap product. But let's see, if you're picking up contracts down here, right, you're putting a position together, and there's going to be a seller up here. As soon as it gets close to 56, there's going to be a seller. Now, you might have to sit in this position for a while, right? You might have to sit in this position for some time. But that's okay if you've got, a sizable account. If you don't have a size account, this trade's not for you. Okay? Wait, sell some at 60 and some at 62. Right? The larger traders are going to work this area out. As London comes in, your focus is on 75.50. Right? So what I'm going to do is I'll buy a little position here, right? And if it holds, I'll put some sell orders up here. Right? There's a standard deviation at 54, so that is obviously why there is a seller there, right? Let London come and test these lows. If you don't have a big account, don't follow me into this trade, right? Because what I'm doing is I'm testing this. I'm also not doing this with the mini. I'm going to do it with the micro. So if I take a loss, it's not a big deal compared to, like, I'm doing it on a large account too, right? Institutions use VWAP and standard deviations exclusively. VWAP is an institutional trading benchmark. Okay? So if you gave me an order to sell 1,000,000 shares, I'm going to try and get you prices above VWAP. That means I've been a good boy and I've done my job, right? If you give me a sell order, I'm going to try and get you prices above VWAP. If you give me a buy order, I'm going to try and get you prices below VWAP. So I get you inventory that is better priced than where the market is. That is why VWAP was it was invented in 1984 by a brokerage firm called Abel Noser, and they used it on the Ford Motor Company. Was the first company it was used on, right? So here, I would have cut a couple of contracts because I was 54 or 52 long. Sell a few contracts. If it gets back above 53, 54, I'll add again. Don't do that if you can't afford that business expense, right? If you can't afford the business expense, do not try and put a position together because you'll blow up your account. The position I'm putting together is on the micros. So even if I lose like $100, $150, it's a $150 loss on a $2 million account where I've made that account probably about 30 or 40 grand this month. So a $150 loss is not a big deal. Do you guys understand the business of that? Get it? Right? So I'm not doing this on a prop account. I'm not doing this on a $2,000 account. I'm doing this on a larger account. And the client knows that sometimes we'll lose a couple $100 testing something out. But that way I know where the buying is. I know where the selling is. I've gone and put my hands in the order flow, put my fingers in the dirt, so I know that later on, sometimes you got to spend money to get information, right? Like in those old movies, in the 70s, you had the snitch, right? The guy, the cops had to pay the guy to get information, right? You've all seen those movies. Well, that's what we're doing here, right? We're paying the snitch to get information, right? And it's a business expense, right? So you only trade that way if you can afford business expenses, right? I was a little early, right? And I paid information to know that I was early. I should have waited. Shoulda, coulda, woulda, but that's okay. It's Friday. that also tells me something about myself, right? When you take trades and they don't go your way, right? Are you trading? Are you forcing things? Are you too early, right? Because if you're too early, then you know that you can kind of relax, chill out a little bit, and adapt, right? You've got to be able to adapt your trading and your psychology. Because the thing is, if you don't police yourself in trading, there's nobody to do it for you, right? So for the rest of us, let's see what do we got here? We've got sellers that were there. They've moved down to here. So as a position trader, I would not start buying this until we got back over 52, right? Until this thing shows me a 53 bid, I'm not interested. Let them sell it off, right? And you lose a little bit of money, that's okay. You've spent money to learn that you are trading too early, right? And you can see that the sellers were here and they moved down here, right? That's why you test the market using the micro. Using the micro is the best way to see if something's working, right? Where you actually get a feel for the order flow. Because the problem is when you use the sim, you should only be using the sim to understand the keystrokes, right? To understand the actual mechanics of execution. But you need to actually trade real order flow because as good as the simulator is, even on Sierra chart, it will never replicate the exact order flow that this market has because it changes instantly. There's no way it can simulate real order flow, right? They do the best they can. Maybe now with AI they'll be able to do it. But, I don't know. I'm not a computer guy, so you need to get in there and get your hands dirty and trade the micro. And that way you'll get a feel for if those orders that you're putting in, would this really work if I did it in real life, right? Because like if you're a boxer and you're hitting the heavy bag, that's cool. But the heavy bag doesn't punch back. So eventually you're going to have to get in there in the ring and spar with somebody, right? And you have to know what it feels like to take a punch because this market's going to this market's trying to knock your lights out. So you got to be able to go and take a punch and feel around. And I understand you don't want to lose money. That's why you use funded accounts, right? And you can reset the evaluations, right? You've got to get a feeling for real order flow, right? It's the only way to do it. Sim trading is great, but it only works for so long, right? We have to get you trading real order flow. So you can get a feel of what it's like when things go wrong. When things go wrong, okay. Now see we're coming up to that 52 again. Watch. See, look how the seller jumped in before 52. These are subtle nuances that you're not going to learn in any other trading room, okay? You're not going to learn this anywhere else. They're not going to teach you where the sellers are. They're going to try and sell you some software and go, oh, there's a size order at this level. And when you get to that level, the size order magically disappears. And that's useless. As we say in Saskatchewan, that's useless as tits on a bull, right? Excuse my language, right? So what you need to do is just watch the tops of these candles. Now, I had a question from somebody this morning before the session started. And he said, I've been in your room for 6 months. I'm still having problem with the look below and fail. And if you're listening, I don't know if you are, sir, that was a great question, right? The look below and fail, do you wait for the candle to close or enter as soon as the offer holds above the balance level? What helped me become consistent was screwing that trade up 1,000 times. It really took me a long, it's just what it is you're trying to get a sense, right? You can see it, right? Okay, cool, you're here. I know exactly what you're going through, right? Because it's frustrating. You see it happen, then you go to trade it, and it doesn't happen when you trade it, right? And that's what I'm talking about. You're getting used to what you're doing when you're trading it and getting stopped out. Try not to get frustrated, right? Frustration will cloud your judgment. Every time you get stopped out, write why you got stopped out, right? Okay, look, it's starting to show life. You see that 32, that 52 bid is starting to creep up, and the offer is now 52 and a half, right? So if I was thinking of buying back a few contracts, I'd wait until we offered over 53 and the bid moved up to 52, right? We only moved up there for like 5 seconds, right? Mike, that's great. Everyone's having the same problem, right? If you weren't having this problem, I'd be worried that you were like some alien, right? If somebody came into the room and said, "Oh, you taught me to look below and fail, and I learned it in 5 minutes, and I just made $1 million," I'd be like, "What are you? What is this, third rock from the sun?" Right? Are you an alien? No. Everybody has the exact same problem. Don't worry about it. It's gonna get better, right? It's gonna get better. It's like you're just doing the reps. The reps are the hard part. The reps are going to teach you. Now, see that now we got some life, right? We got some life. So I'm going to add to that trade, right? I need it to hold 52. See, it's not. Right? See how they faked you out? They poke their head above there. Oh, yeah, come and buy it. Ah, gotcha. Right? Hey, look, come and buy it. Right? Because everybody thinks if I don't buy it now, it's going to run and I'm going to miss it, right? Right? It's the same, like we all go through those same things. So that's why I try and do these sessions every day, twice a day, and zone in. When it's slow like this is the greatest time to learn, right? This is the greatest time to watch that offer and watch the behavior of the offer. Now, yesterday, I think it was Jimmy asked me, is it the speed of the offer? No, if the offer is moving really quick, just stay the hell away from the market for now. But what we want to do is we want to try as much as we can to watch the behavior of the seller. See, the offer, when the offer moves, right, from here to here to here, that means the sellers are marking price down, right? They're moving their selling price down to capture the buying or to entice buyers, right? So had I gone in and started buying the 52 there, I would have been early and getting stopped out again, right? Do you guys understand what I'm saying? That's why we're being really, really patient and substitute the word smart for patient. We got to be a little cagey in this market, right? We got to be a little shrewd. We got to be like thieves. We sneak in, sneak out, and we have to sit and watch this shit. Sometimes for hours. And over time, when you take these trades and you start executing, you can see that there's buyers here, right? There's bids here. I'm going to mark this green for bid, right? So every time we come down here, they stop selling and they lift the offer, right? Watch the behavior of it. I think every charting software has the bid and the offer indicator. Just watch that red line, right? Because what you're doing is you're watching the behavior of the seller. It's the behavior of the seller that you're watching. See how they raised the offer over 51? That's important. Does it stay over 51 or do they put it on sale again? Right? I know this is really tedious and you're not making any money right now, but that's okay. This is a great learning morning, right? Now I know it's Friday and you guys are tired. You know, some of you are pissed off that you haven't done well. Frustration is your greatest friend in this business. Embrace that frustration. It's like angry running guy David Goggins says, embrace the suck. Yes, Moran, exactly. It's establishing a little cost basis here. So as long as that overnight low doesn't hold, right? As long as that overnight low doesn't, as long as that overnight low holds, that's what I'm really waiting for, right? The best trade would be a look below and fail of the overnight low, right? That would be the best trade. But right now, let the large traders work this out and watch them. Watch them like a hawk. How long do you wait for the offer to stay above a balance level before pulling the trigger? Here's the answer that's going to drive you crazy, sir. It's different every time. It's different every time. That's why you got to watch it. That's why you got to do the look below and fail 1,000 times to understand the nuance of the situation. You know what I mean? So I think we're going to take out that stop. Let's see if we can get down to 47. Okay? I know that's not the answer you wanted to hear, right? You wanted to hear, oh, it's exactly 5 seconds, right? But because this is a dynamic market, it's different every single time it comes down there and transacts. Right? And this used to drive me nuts until I learned how to zone in on the offer. It's going to take some time. And you're going to screw it up a bunch of times. Right? And you have to make peace with that. But over time, you know, it's like the doctors, like when you take human anatomy and they show you in the book, the veins are one color, the arteries are one color, everything's color coded and it looks so clean and beautiful. Then they go and make you do a dissection and everything's gray. Right? So like you like how do you tell what's what? And that's the experience of doing something over and over and over and over and over. The discipline to do something over and over and over again and the repetition. If you take repetition and discipline, and first you have to know exactly what to look for, and it has to make sense, right? But once you know what to look for, and you train your eye to look for it, then you can see it. Okay, that's great. Now we can see it. How the hell do we execute it? Okay. If the sellers are stepping down, why not short put bids in below? Yeah, if you're quick enough. Are you quick enough? Right? I'm just talking how I'm looking at the situation as a size long. But sure, yeah, you're right, Italian trader. If you saw a seller here, you could short a little here, put your stop here, and then put bids down. Right? I've been, and I'm glad you brought that up because I've been a little bit one-sided this morning. Right? But these guys were asking about the look below and fail, so I was trying to teach them how to watch that offer. Right? But you can use that to see if you were short here, right? If you were short in that area because you saw a seller at 51, right, and it breaks that bid, you go and you put your bids down there. That's smart. Not everyone can do that though. But if you learn to identify how the offer moves, it's going to make you a better short seller, right? You're right, right? Yeah. And what we're trying to do is we're trying to focus people because what I teach people, like Italian trader, you've been around for a while. If you're consistently profitable, that works for you. If you're a new trader and you're not consistently profitable, don't try what Italian trader just said because you're not going to, it's not going to work because you're not used to the offer, right? But if you are an experienced trader, then you can short, put your stops here, and then bid, 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 right? I always teach people to go long first because this market's, yeah, let's face it, this market is built to go long. You know, if I told you, hey, go buy 1,000 shares of Microsoft at $200, and in 10 years you're going to owe $1 million, no one's going to go for that. That's a shitty deal, right? Everything's built on capital appreciation, and the market's intended to go up. That's why I try and teach new traders to take the trade where the market fights you less, right? But that is valid, right? What I'm trying to teach these guys, and especially with Sir and his question about the look below and fail, I'm just trying to show how to watch the behavior of the offer, right? So your trade is completely valid, right? And I haven't talked about shorting. I'm going to spend some more time on shorting as well. But I know that a lot of guys and ladies are having trouble in this market with especially that look below and fail. When do you take it? How do you take it? Now look, we got there's the bid that we're looking for. See? See, this is where the shorts came in and got some cheap stuff. And now, do we get over that 52? But there's going to be sellers. So now we got a little position between 49 and 52. Look, see how they're selling it up? See it? This is what I was waiting for. So I went and added a couple at 52, put out a sell at 53, sold two at 53, in and out, and I'm testing this order flow because I'm seeing where the bid. This is how large traders trade. Because large traders they don't pay per trade, right? They have prime brokerage accounts, and you basically what you do is you negotiate your commissions at the beginning of the year with your prime broker. No problem. Also, Italian trader, you remember anytime you want, man, you know, you can hop on a call with me, right? Anytime you want, right? And if I'm asleep, I'm assuming you're in Italy and not in New York because you're up at this hour. Right? So if I'm around, just go, hey, JJ, I need some help, right? So my 52s are gone now, right? When it came back up over 51 and a half, 52, I bought a few and I sold them at 53, 54, right? And I'm just working it back and forth, right? Just like I used to when I was on the desk. Work it back and forth, right? Nice. I tell you, a couple of years ago, I was in Rome. I'd love to live in Rome. Especially if I was young, I'd live in Rome and I'd stay up all night. Rome at night is amazing. I loved Milan too, but I felt very underdressed. So I bought it back again at 53.39. I'm selling 54.75. I'm offered 55. I'm just working this back and forth just to make a couple of bucks, and not really, it's not to make the money, it's just to test that flow. Right? We're gonna hit traffic here, right? There's gonna be some traffic here. So there's gonna be sellers somewhere here, right? Sorry, MMXM, I don't understand this. Google, it doesn't translate for me on YouTube, so I'm not sure what you're saying. Don't mean to be rude. Right? Remember I said traffic? There's the traffic. Right now we know where the traffic is. Look at that. Boom, boom, boom. Let's see where we bid. Let's see where we find the bid. One thing that you have noticed is the POC has not moved down, right? Yo, Fish, what's going on, man? How you doing, brother? Good to see you. A little bit of a discount down to 51. Brought in buyers. Woo. Right? This is a tough pattern to trade or a tough business to trade here. Larger trade, I mean, sort of newer traders, what you're doing now is you want to wait until we reclaim 57. Because what we're going to do is we're going to take this cheap crap that we have here and try and sell it as close to VWAP as we can. Okay? Very simple. And that's where your sellers are going to be. So if you're buying 57, 58, once we reclaim, you'll be looking for up here. Okay? Oh, the point of control moved down. What a coincidence. Ooh, there we go. Right, so if you're long, sell them like you stole them, my friends. Sell them like you stole them. We'll see you soon, Fish. Have a good weekend, brother. It's good to see you. You know, if you've got contracts, sell them. For the love of God, sell them. Right? If you're long the 52s, 51, 52, take some profits in the 54, 55s. What you're saying is what I'm seeing. Oh, good. I love it when a plan comes together, right? So almost flat here. Got a couple of contracts left, right? I always sell into strength. I have to, right? It's what's been taught me. I mean, I've been taught to sell into strength always. You know, my first boss, his name was Dwayne. You know, he taught me two things that have I've never forgotten. One is don't ever pay for stock because they give it to you for free. And I'm offered at 56 and a quarter. I'm gonna on my last contract. I'm gonna move that down to 55 and a half, and I'm out. I'm flat. Okay. So one thing he said was never ever pay for stock, right? And I've never in my entire life ever paid for stock because they give it to you for free. And the other thing is I never saw a bid I didn't like, right? You show me a bid, I'm gonna hit it. If I'm long, I'm hitting it, right? If I make a nickel, if I make a dime, there's always the next trade. Always the next trade. Doesn't matter to me, right? Any questions before I let you guys go? Yes, no? Hey, the A-Team was a classic TV show, Cisco. You guys good? Cool, cool. If I don't see you this afternoon or this morning, for those of you stateside, have a wonderful, wonderful weekend. We will see you bright and early on Monday. And if you're with us for the RTH session, it starts at around 9:15, 2:15, and we'll see you soon. Thanks, everyone. Have a wonderful, wonderful morning. And just those of you who are interested in one-on-one coaching, I'm going to be raising the prices of one-on-one coaching. So just because I have to, let me know if anyone's interested before the price increase. We'll get you in at the current price. It's lifetime one-on-one coaching, and unlike other coaching services, I absolutely guarantee your success because I'll be with you until you're successful. And I got a clean bill of health now, so the old heart's good. Thanks, everyone. Have a great morning. Have a great weekend. Be safe out there. Bye for now.